Aloha and welcome to Java. Thank you all kindly for joining me again. It's Friday, May 17th, 2024. First, I would like to say thank you to all of you that are here every day, commenting every day and sharing this. We've got to get this video out because I would like more people to realize what is going on in the underlying of this so they're not caught off guard, because we had the stock market just boom yesterday and everybody thinks that that is related to the economy and that our economy is strong, and it's quite the opposite. So let's go into our markets. We've got the MMRI showing our relative risk increasing a bit since yesterday. So as I said yesterday, the Dow hit a record high, 40,000 points. So we've got a lot of greed back in this market. We had the relative strength of the dollar as well as the 10-year yield pulled back. That gave room for stocks to rally a bit, but they're gaining a bit of strength again this morning. So what is actually going on with this is we've got stocks back in the red, dropping again after yesterday, kind of retracing a bit. And we've got the futures kind of flat, mixed. So that leaves us with basically neutral sentiment. It's kind of more of consolidation right now, going to be a chop zone. If anything, could be weak towards the end of the day, possibly free fall Friday in that last hour if volume comes in and sell off or profit taking hits. So what is going on with this? We've got a lot behind this. And with this stock market hitting all-time highs, can it continue? Yes, because stocks arguably are an item in a way to get your money out, the cash, something to put it into. So with inflation happening, the price of stocks are rising as well as everything else. So your house pricing still hasn't dropped, and your vehicle pricing, insurance still has not dropped. This also will continue to a point. So someday it will, but right now they've kind of got this consolidation going on, possibly continuing higher, especially until November is selection cycle in the United States. So we'll keep that in mind too. So looking into our calendar, we don't have much today really. It's U.S. leading economic indicators coming out at 10 a.m. And then really what moves this market is the Federal Reserve presidents, how they're speaking, because it's all about the rate cuts again. So we've got Waller speaking today. Want to go over Barkin came out yesterday and said consumers are the ones driving inflation. And it's all because these consumers are spending the money, not because they're flooding the system with all of these dollars, but because consumers actually have the audacity to spend it in this inflationary environment. So, in reality, would you hold a pile of something that is losing value or trade it as fast as you can for something that might hold value? So, that's driving gold, silver prices. We'll talk about that in a minute. So, earnings for the week wrapping up. What's left this morning's prior to market open, not anything truly huge. So, with that, we're going into the United States hiking China tariffs. Imports are soaring from Vietnam, so they are kind of shifting from trade with China to trade with the United States. Now, they are sanctioned, and they are also on the other side getting offered large deals, like all of these subsidies from the United States. So, of course, they're going to trade because it's where the money is. So with this, we've also got Hong Kong officially launching digital yuan payments pilot. So rolling out their CBDC, they've already done a couple of trials, smaller province. And with this is also coming the startup of the surveillance and tracking that goes along with this. So keep an eye on that. And we've got the IMF saying United States inflation data is higher than they would like, but they have no control of this really, but they are going to be affected by it because they have to watch their rate hikes or cuts because of the currency valuation, the relative strength of the currencies. So it either will throw off their trade, kill their economy, or crush their currency. So they must work together with the Federal Reserve despite what they say. So we've got the UK saying jobs market cooling, keeping them on track for rate cuts. They're not going to cut rates anytime soon. But their unemployment level's about 4.3% as they're reporting. Now, France currently, as they're reporting, over 7%, and these are going to increase. So Bank of England saying their rate cuts hinge on the inflationary pressures easing. We've got European central banks, Schnabel, saying July cut doesn't look warranted. So they're pushing it out as well. And just kind of managing this language back and forth to give them the leeway to go either way. So down to the currency wars, which is really what's going on. We've got China dumping the largest amount of US Treasury and agency debt in history. So China selling off all of the debt that they were forced to take on. All of these countries around the world were forced to take, like basically purchase treasuries in trade with also US dollar cash reserves in order to do any of their purchasing for oil or anything else with the petrodollar. So now they are deleveraging and getting rid of these toxic assets, especially after the seizure of Russian and Chinese assets with the collapse of SVB. So, on the back of all of this, they are now purchasing more gold and shifting all of their reserves, trading in their native direct trade, basically, between China and Russia. We'll talk about them in a moment, too. We've got silver on the brink of the highest price in more than a decade. So, the past couple of days, it's really had a rally. So getting to a local high, probably expect a little bit of a pullback. Can get better prices. Today is probably going to be a high day to buy. However, long term still good. Not financial advice. So we've got the yen, Japanese yen dropping. Bank of Japan maintaining their buyout amount. So this weakness is going to affect their bond buyouts, and they may also take other action. So this is saying they may raise rates. They have to protect the currency. Again, if they protect their currency, they're going to take a hit with the economy. It's just how it works. So the companies and jobs want to bring up a few things. Reddit now, they're basically slated to train OpenAI. So this is all, even though it's not directly Microsoft, everybody knows that it is. They just don't call it that because they don't want a monopoly. So Microsoft is growing on this OpenAI as well as offering cloud customers an alternative from AMD as opposed to NVIDIA, because NVIDIA has just become so incredibly expensive for the chip sector. So, venture capital roundup, what they're looking at putting money into going forward. Web3 infrastructure, the tokenization of everything, drawing investors. So, as I brought up that company yesterday, Securities, hopefully you got a moment to take a look at that video. It's pretty short. I believe it's just over 3 minutes, but he's speaking about how they've been tokenizing, basically funding. Stocks is what they start with, and then it's going to expand. So we've got Walmart yesterday reported earnings, and there is such a contrast in this story. It's telling what's exactly going on. That a strong forecast signaling a resilient consumer is the cover story. Behind it, they're saying wealthier customers flocking to Walmart to boost their sales to a strong first quarter earnings. So this is a notch down. You got more well-to-do, so to speak, consumers that generally have more money are now shopping at Walmart for the discounts. And we've got the real US consumer starting to crack. So as income drops down, everybody tears down a bit, tightening up the belts. So we also had a few other things happen with this. We had a severe storm in Houston. A lot of this has been coming out, the damage, and kind of basically what is going on in the back of this is a lot of weather modification. So this is in turn hitting insurance companies and also increasing inflation. So it seems like an off story, but really it isn't. It's a huge economic headwind, pun intended, for what is coming forward. So with this, we've got President Vladimir Putin is visiting China, and they're building ties. They get along swimmingly, and Moscow and Beijing are reinforcing a strategic energy alliance. So those two, between the two and between BRICS, huge natural gas and oil reserves, they're very strong. So we've got this coming out about poking the bear and find out. Here's why the West should finally listen to Russia's warnings. Well, they're actually poking the bear and the dragon, which is China, at the same time. So with this, I'd like to go over our herb for the day is thyme. So it has a lot of medicinal properties, very mild flavored, very easy to grow, and also is good for all of these things. Food preservative, helps with oils, maintained because it's antimicrobial. So it helps with medical conditions, your skin, it boosts your immunity, and it's also good for hair loss. So some interesting things there. And I definitely need this one after what's going on in the markets, keeping the high blood pressure down. So with that, I wish you all a wonderful trading day, good day in general. And until I see you again, my friends, stay free.